Welcome to the Rose Show podcast. Today I'm here with Christian Fromhertz, CEO of Tribeca Trade Group, staying one step ahead of the market's trend and momentum. So how you doing today, Christian?
Good, not too bad. It's a Monday, so we're just starting the week off, and it's going to be another. These weeks have not been dull by any means. We've got through a couple of weeks of big earnings, and we got through the Fed meeting last week. So now we're on to things like fun things like the debt ceiling and the CPI report. As well as I think some interesting earnings reports are gonna be coming up too, like some smaller growth names too. So another action-packed week that we're starting off with.
Absolutely exciting times from earnings now into this debt ceiling, and CPI, I believe, is this week as well. So we've got a lot of data coming our way. So tell us, Christian, what are your thoughts on this market lately?
Well, I mean, I think it's been a challenging market. We've certainly seen these starts and stops, and I think that's been kind of difficult, and it really requires, I think, a lot of patience and like a lot of understanding. I think it's one of the challenging things always that everybody wants to make money in the market. That's why they're trading, and there's a lot of gratifying moments in trading. And one of them is just trading full time. It's earning money for yourself, for income. But I think like this year there's been decent opportunities, but then it's been very different than other periods where sometimes we begin to kind of break a range or something like that, and we've got some nice follow through. This has been a very kind of like it's almost like a ninja type market where you'll get some momentum for a couple days and people start to get a little bit bulled up, and then all of a sudden the momentum will completely dry up and will start moving the other way. And I think vice versa, if you're playing some things to the short side, or if you're a little bit bearish, I think that's probably a frustrating market too, because things are not going completely, all, it's not all butterflies and rainbows, of course, out there.
Yeah,
And you think, okay, well, we've got like a banking situation. We've got a couple different things that are probably going to break the markets back. And we're not seeing that either, too. And that has actually been, of course, negative for the banks, but positive for some other areas of the market. So overall, it's been a tricky market to navigate. But I think, if you are paying attention to the number one indicator that I use, which is price, I think that's kind of keeping you somewhat at bay. And, as long as you're not jumping to conclusions with, oh, geez, we have so much macro worries. I think if you're paying attention to price, you're staying kind of, not over the tips of your skis with this market, and you're staying somewhat grounded.
absolutely. Well said. Ultimately, we follow price, and that's what we focus on in trading. Otherwise, we lose our minds with all this data coming our ways. And, you mentioned the macro backdrop and the banking crisis. I think I'd like to begin there to
Sure.
set the backdrop for the current market that we're in, which seems to be ongoing. I don't think things have changed much. We've had persistently elevated inflation, and the rate hikes have continued, even though they've been saying we're going to have a pause and we'll have to wait and see if it occurs. And this banking crisis, what are your thoughts on what went on and what's going on with KRE, the regional banks?
Yeah, and obviously it's another like interesting chapter in terms of what we're experiencing. I mean, we heard for a while that the Fed, as they've been having the various different meetings, and of course last week was the last Fed meeting, but we kind of know that if you've been in the market for a while, that the Fed, once they're raising interest rates, they usually break something. They usually damage something. So I think right now it's some of these banks that just did not do what they should be doing, and I can't speak for them, and I'm not a banking expert, and or a regional banking expert, but it seems like there's a common thread here. Some of them who really just didn't take care of monitoring interest rate risk, as well as may have done some other lending practices with mortgages and so forth. Right? There's some bad apples out there, and they're being hurt. I think whenever you have a situation like this, and clearly you could say it in the KRE ETF, is that this is the question is how widespread this is. And I think right now the market, whenever this goes on, it's a shoot first and look later. There's a lot of banks that have been going down, but they may end up 6 months or a year. This may be a good buying opportunity for some of these banks that are just getting caught up. So being that I'm not an expert in this area, I do rely on price for what it's telling me. But I think that it could be a number of other banks that are having issue. One of the things that's kind of different, right? Because everybody always likes to compare different time frames. Like, for a while, like I saw a lot of people comparing like the S&P chart with what was happening in 2008, 2000,
Yeah.
and first of all, every time that there's some type of a crisis, it's different, right? It never goes play by play, right? But it's important to kind of learn some of the lessons, because history does rhyme to some extent to that. But what's different about this is the bigger banks seem like they are, they've got the reserves, and they're in a much better situation. Now, it doesn't mean that they're not going to be susceptible, right? And that's something that I think brings kind of the unknown to what's happening here, that we're going to have to monitor, what a JP Morgan and what if a Bank of America is doing, right? And how they look. Because it seems like right now they have ample, like, both reserves, and like the Fed and the Treasury are taking care of them. They're taking care of the big guy, not the little guy. So, we'll have to keep an eye on that. One thing I noticed with KRE, which, the regional banking ETF, is that there was an enormous amount of volume on one day last week. So, and that's when we kind of took another leg lower the day after the Fed meeting. And it did snap back a little bit. I mean, I don't think it recovers. I think it's going to take a long time before people get comfortable. I think the Fed also has to stop hiking, and maybe announce that they're doing so for investors to feel better, because at the end of the day, it is a confidence game, right? The bank, when you put your money with a bank, you have to be confident in them. And it's also like the stock market, right? Investors have to be, there's also a confidence game in the stock market. If you're confident about what's going on with companies, right, you're more likely to invest money. If you're not feeling confident about the situation, right, you're either going to, from a banking situation, you're probably going to pull your money, or you're going to be doing some selling in the stock market if you're not confident. So there's a lot of psychological reasons to that, of what's going on right now.
Absolutely. It is a mindset, and it has a lot to do with psychology. I mean, the market is made up of buyers and sellers, people. So great points that you made there, Christian. I'd like to know your thoughts on earnings so far and what has gone on. In my opinion, it seems to be better than expected, but not necessarily good. What are your thoughts out there?
Yeah, that's a great way to describe it. And I think it really depends on the area of the market, the sector. But yeah, I mean, I think that's where younger investors get a little bit confused, because you look at, and I've been, on Twitter, it's a funny place, but somebody will tell me, well, geez, well, look at their year-over-year earnings are such a decline. But you have to remember that the market is about future expectations. It's not about what happened in the past. It's about, also what is being priced in. So where analysts think that they report, and it goes both ways. When the market was going up, some of the expectations were just a little bit too high. So even though, I would have to explain this concept too, when when a company was executing and they beat their analyst estimates, right? And even their guidance was pretty good, but the stock wasn't popping. The stock was actually going down, right? So again, in that situation, it was about like a lot of good news was already priced into the
Mhm.
stocks, and they needed to actually beat like a further number for the stock price to go up, because maybe it had advanced 20% over the last quarter, and that was already built into the stock price. So that was when the market was going up. Now that the market's going down, right, we've been hearing various different economic analysts say, the earnings are going to be horrible. And,
Mhm.
the analysts who do put out, price targets and so forth, they've lowered a lot of those, a lot of their estimates. So it is an easier bar to jump over.
Mhm.
So, back to your question, I think that the earnings have been pretty good. Certainly there's some names that have really fallen hard. And I think if you are still missing your number decently, we've seen a number of names get, go down pretty decently. But in terms of those bigger companies, Apple just reported last week, did they put out a stellar quarter in terms of what everybody's looking for and iPhones and all that stuff? Probably not, but still, the company's generating an awful lot of money. We just heard from Warren Buffett this weekend that said he thinks it's one of the best run companies out there. So when you've got his confidence and he's a long-term investor, I think that means something. As well as many of the other companies that have come out, and one of the things that I was curious about too, for like your Microsoft and your Google and these big mega cap companies, is what new are they going to be putting out? And clearly this theme of AI, I don't know whether how it develops and whether or not they're going to be making a ton of money, but at least they have a new catalyst, because I think that some of their um, I don't want to say their business model, but it just got a little bit like every time they reported earnings, it was like, well, where is their new revenue driver going to come from? How are they going to continue to grow? And I think this AI theme has provided a tailwind to not just those companies, but a lot of other companies too. So it's made things interesting, like in Nvidia, and so on and so forth, some of the other chip names too, where they've got something that's going to increase their business.
Love that point. That was an excellent point that you
Thanks.
made regarding AI. Yeah, you need that catalyst,
Yeah,
that
absolutely.
something just to show that they're ready to go over to that next level, to keep growing as they have been. And yeah, I mean, maybe AI. I mean, I think AI is the future. Automation is key. I mean, we've had reduced productivity for quite some time and still declining. So automation is much needed as a solution to increase that productivity. So AI, the buzzword, and it's definitely the market has liked it. I mean, if you had great reaction to it, I think they were like on Twitter, they said, how many times did they say the word AI in the conference call? I guess they're milking that as much as they can. But
Yeah,
great points.
it is a bit of overkill, but I think at least it's getting investors a little bit more excited about
Excited, yeah.
and even though AI has been a theme for a number of years, sometimes it's just the way that it either changes or when they're bringing out new products,
Yes.
it there's at least something new that's coming out, and you will need chip companies to make this, and so on and so forth.
Absolutely. It's about framing and how they're framing it. And right now, that seems to be the key, and people are liking it. You had a great tweet recently about the US credit default swaps. And I know you have a background with bonds and yields, and you're very familiar with all that. So you noticed that it was higher than the recent past with all the debt ceiling issues. What do you make of all that?
Yeah, it's troubling, and I besides watching the price action, of equities and so forth. Yeah, I will very much watch what's going on in the fixed income markets. They're very important markets.
Mhm.
When yields are really moving quickly, right, that could really affect equity prices. So, yeah, I mean, I think that this situation with the debt ceiling is not a good one, and we'll see how it shakes out in the coming days, coming weeks, and yeah, I mean, to see that not only are they talking about that, but also there's some pricing like CDS. I mean, to me, it's troubling, and there could be some risk, and and that's why we can do things like put hedges on, and understand when there's event. Like, I view it right now as event risk. I think that we have a lot of event risk. We have event risk every time that there's a Fed meeting, or every time there's one of these CPI reports. So this is something else. And I don't think, including myself, I'm not an expert on debt ceiling, and but all the basically how I'm interpreting it is, it's just it's another event that where something could go wrong, or really derail the price action. So yeah, I think it makes sense, seeing where that level is, and that it's not just talk, right? When you see the pricing go up like that, it's concerning.
It
So,
is.
there's things to do now while it is calm, right? I always get the question sometimes of, like, when the market has already moved or started to move to the downside, geez, what do I do to kind of hedge myself? Or, like, so right now, as the market's been kind of locked in, the overall market's been locked in a range. Now is the time, I think, the VIX has slipped up back under 17, right?
Hmm.
You want to be adding some exposure, if that's what you want to do. Um, if you're holding positions while the VIX is low and while things are relatively calm. So I think that makes sense here. And of course, the other thing that I try to tell traders and investors is that your other option is just to, reduce some of your positions, right? If you don't want to put on, a hedge, or,
Hmm.
puts, then that's the right thing to do. But yeah, I mean, the deadline, I think, is what, June 1st. They're supposed to
Hmm.
meet tomorrow, which for one, I think that meeting's supposed to be at 4 o'clock tomorrow, but I'm very skeptical. I think they're going to wait until, like, almost the last minute, and that could cause some short-term volatility somewhere. So, yeah, that's just another thing to kind of add to the list of the wall of worry right now.
Exactly, just the wall of worry. And I know there are many different strategies to sort of protect yourself. And yeah, having more cash, more liquidity in times of uncertainty, with all this potential doom and gloom news that can happen with the debt ceiling and high, persistently elevated inflation. And if you looked at Cleveland Fed, they're showing still a plus 0.5% of the core inflation estimated for April. So, we're still increasing. And I think it was, no, 0.4, I think 0.46, I think that's what it was. And, we're
Yep.
still increasing month over month. And that's concerning as well. And you and I all know that, prices are still elevated, especially in our area here in New York. We're both in the New York metro area. And we know that the prices are still high, for food, for everything. And that's certainly not coming down. Inflation is cumulative. So there are a lot of things to think about. And what we really want to know more than anything is how Christian Fromhertz is staying one step of the market's trend and momentum. And I have to tell you, Christian, I've been following you for quite some time on Twitter, and I love your charts, and your analysis is fantastic. So I would love to hear more about your proprietary method of, price, volume, and time. And what's very important, and you say that on your website, your goal is to have an objective, unbiased view. And that's important, because I always talk about biases, and we all have personal biases. We have anchoring bias, recency bias. So, having something objective to help us with entry and exit is so important. So, could you tell us about your proprietary indicators?
Sure. Thank you. And thanks for that. So many kind words there. I thank you very much for that. I appreciate that. Yeah. So, I mean, it's so, staying one step, ahead of the market, and, really what I try to do is just basically find new trends, right? And catch on to them really early. So, it's a lot of scanning through charts and noticing where there's option activity, and being objective in terms of looking at those things. And before I get into the indicator, I just wanted to mention that first is, like, identifying these things. And then I really like, there's a whenever there's a interview with Stan Druckenmiller, who who surfaces every once in a while, and he gives a talk or some type of a webcast. I really kind of take a lot of information from that. And one of the things that he mentions is, just being very flexible. Right. He understands that he's going to be wrong a lot. And he has the ability. One of the things that he said that's helped him over the years is just the ability to kind of change your mind very quickly when there's new information out there. So
Yes.
I just wanted to share that because I think like that's the starting point of saying, okay, how am I going to tackle the markets? Right. And you mentioned like the, anchoring and so forth and regency bias. You don't, you want to be able to kind of pivot rather quickly when the information changes or when the price action changes. So that's very important. It's very important to be objective and to have an open mind. But yeah, I mean, if you want, I can share my screen and we
Yeah,
could talk about
I've
where.
enabled it, so you can please do. I'd love to
Okay.
learn more about the markets web indicator and all of your fun stuff.
Sure. So basically what the indicator that I've been using, and one of my colleagues, Webb Begol, he actually has developed this, and I've kind of helped develop the last couple versions with him. But really, what we're looking at is volume at price, and simply instead of just looking at the volume, on the bottom of your screen, which many traders and technical traders look at, we're actually using the volume in the chart itself, right? And
Wow.
that's using the volume profile. So that will just basically tell you, rather than where volume is occurring at time, it's telling you where volume is occurring at a price action. Right.
Mm.
So when we put together our what's called the value area, which on the daily, well, we can start with the weekly chart because that's the simplest thing I think to understand.
Which time frames do you use?
So I use for most of my trading, I'm
Mhm.
using the daily chart and the 1 hour chart because
Okay.
I'm mainly short to medium term swing trader, but I also do some long-term swing trading too. And so the three time frames that I really look at are the weekly chart, the daily chart, and the 1 hour chart. So to start the weekly chart, so I mentioned that's the volume. People look at it in terms of day count, time, and I'm looking at it in terms of one of the things that we're looking at is where it occurs at price. But what this
Hmm.
indicator does is puts the three of them together. So it looks at, of course, the price action, the volume at the price and at the time. So for instance, I'm looking at a weekly chart here of just S&P futures. So this value area that we're looking at is based on all of last year's price action
Mm.
and that volume. So this won't change at all. This resistance, which is 42.57, and on the downside is 36.51. So it kind of just sums up the year that we're having. Notice that we opened up the
Mm.
year inside the value area, and that
Yes.
basically on the left of the screen, you could see that we're range bound until we break out of this. Now we could stay in the value area it's not predictive. It's right. It's not going to tell you what's going to happen. Is this going to tell you when something is basically changing, right? If we start to break out of the value area at 42.57, then we're beginning to trend and we're beginning to trend higher. If we break below, then we're beginning to trend to the downside. So this won't change for the whole year, and this is also the most significant once we
Mm.
get to one of those levels. So it goes, the highest significance is the bigger time frame. Also note at this point for the month, and
Hmm.
I've got trend lines drawn and I use moving averages as well. But especially once we're trading like above the value area, then I'll begin to use the moving averages a little bit more. But
Mm.
we're also right now inside value for the month. So, again, we're for the S&P, it's range bound right now on multiple time frames. If we want to look at the 1 hour
Hmm.
as well, so the daily chart will give you the value area. This value area is basically for the whole month of May, and that's based on all of April's price activity and the volume activity as well. The 1 hour, which we get a new value area for every start of the week, and that's based on last week's activity. So it kind of starts with that, and that's how we can kind of start to identify trends a little bit quicker. So again, all three of these timeframes that we just looked at were inside the value area, meaning we're range bound right now.
Range bound,
yeah, and until we break 4150, we're leaning a little bit closer to the upside here. We weren't able to do it today. Notice that we tested it a couple times today, and we just weren't ready to go higher here. So 4159 is the level to watch there. Also note, once we broke this, there's something called the 80% rule, which is when you start the period either above or below and you break into the value area, there's an 80% chance that you go from one side to the other.
Oh, yeah, your 80% rule. Could you tell us
Right.
about that means? It just means 80% chance it goes to the other side?
Yeah, just as long as you start the period either above or below. So last week, for example, we started the period above the value area, and once we broke in, right, then the 80% rule triggers. And what that means is that there's just an 80% chance that we go from one side of the value area to the other. So we did not actually come up with that. That's Dalton, who's done a number of studies on value areas, and I think he uses value areas a little bit differently than I do, but specifically just for S&P futures. But yeah, so this played out, and the 80% rule happened. So this week is different. We're not starting above, we're not starting below value, we're starting right inside the value area. So there's no 80% rule for this week, unless we happen to kind of get back above and then break back in. But for now, the level to watch on the upside is 4159. So very dull, I would say, for the S&P, being that it's inside value on 3 different time frames, but that could change very quickly. So for now, that's we have levels to pay attention to. The cues, on the other hand, so we'll start with the weekly chart.
Yeah.
And this has more, we're leaning a little bit higher to the upside, but the cues are going to have to get through this 332 level if we continue with the trajectory that we're moving. And again, the picture's a little bit different here than S&P, because we are actually above the value area for the month. So and you could see on the left of your screen, it's saying uptrending. So as long as we stay above the value area, we're now in what's known as price discovery. We're starting to move. We've moved out of the range. We kind of checked back there in the middle of last week, and we're starting to move. So where it would get more interesting, and this is a level that I'm watching for this week, is if we break decisively above the 323.40 level. We closed right around there. So again, it doesn't have to be like, I'm not making a decision like as soon as like 1 penny gets above the value area. It's, the more that it kind of gets a little bit further above, the more I feel a bit confident. But really what this helps you do as a trader is just objectively define, okay, I'm going to be long if we're above value, and if we break back inside, then I'm going to remove my trade. And it can also kind of give you some areas to kind of take targets. Notice that we don't have any of these red lines above right now, which is a good thing. The red lines are indicate where there's overhead supply or demand. We don't have one of these. So if we take just a step back, but notice that we took one of these out like right at the end of March. And this is a lot of times what we can see is just digestion, right? Because it's a big area of volume, right? This red line goes back to this value area. So a lot of volume back here. And price action did not cross this dotted line, which is the point of control, which is where the majority of volume occurred in that period. So it kind of just, a lot of traders like gaps, right? And some of them say there's one rule that you always hear people say is that gaps usually get filled.
Yes.
Right? It's kind of the same concept that we're kind of leaving like a gap behind here. It's not a price gap, but it's an area of high volume that the price did not revisit. And once we did revisit it, we basically just went sideways for about a month. So that volume kind of really just held us in check. So that's the danger. That also happened with the S&P too. We got to one of these levels and we basically just hung out there, right? And that was right in here. So again, it's an obstacle, it's overhead supply, and ultimately what you want to see is price overcome that, and new buyers. So new buyers basically have to kind of, like, if you kind of think of it as as a relay race, right?
Mm-hmm.
There's a new buyer that the baton has to be passed to, and they
Mm-hmm.
need to begin their leg. If there's no big new buyer, then you're basically going to stay in this range, and buyers and sellers are going to they're going to fight it out until really there's that confirmation where there's new buying that has to happen to get us out of that. So that's very intuitive too to me when I was an institutional trader,
Mm-hmm.
because I used to hear, we would have sales traders that would speak to clients, but I often spoke to our big hedge fund clients too when I was an institutional trader, and they would say, hey, whenever price gets to this level, they may have had a particular level for, let's say, fundamental reasons. And they would say, hey, whenever we get to, let's say, 325 in the Qs, I'm a seller. And so they would sell like a good portion of their order. And if they could maybe sell the whole thing there, maybe they would, or maybe they would say, hey, sell half my position there. Right. And that's the same thing on the downside too for stocks. Many investors will have valuation models that would say, and I'm just making up, let's say ABC stock is trading at $100. Well, if it ever gets down to 100, I'm going to buy,
Mm-hmm.
100,000 shares. Right. So you get these sticky levels because buyers care at some levels, sellers care at other levels. So that's the kind of background behind a virgin point of control. It picks up on the memory on where there's been a lot of volume previously in the market.
Wonderful. I love it. You have beautiful charts and it all makes sense. You really make it look so simple and it's so intuitive. I love that how you showed us on the futures how it was all range bound for all the time frames, and that's exactly what we've experienced. So this is a great roadmap for the future. But I have a question, when you see that it's in the range, like you saw
Yeah.
before in that value area that
Mm-hmm.
you call it, does that mean it's not necessarily trending and it's just sideways, or there is a trend within that value area as well?
Well, you're correct on both of the, like, basically the trend is sideways. So
Mhm.
so you could say that it's not trending, that's, up or
Mhm.
down, but you could also say that the trend is just sideways, however you want to phrase it. But yeah, it does two things. I mean, it really helps you be objective as a trader to
Mhm.
basically say, to give you some decision points, right? So that you're taking the emotion out of the equation.
Mhm.
The second thing that it does is just it helps you be a little bit patient, right? If we are going in that range, it kind of just, helps you kind of stay grounded and say, okay, well, we're moving up here. And, this market has been more of a market that, as we're moving in a range, as we get to the bottom of the range, and provided that we hold it, it's been a place to add. And as we get to the top of the range, it's been a place to sell. So selling the rip and buying the dip really until the major support resistance gets broken, right?
Mhm.
That's been like the winning strategy, I think, for a lot of traders this
Mhm.
year is, and some traders are even like selling premium once we get to the high of the range, or
Mhm.
selling puts when we get to the bottom of the range, if you want to be aggressive in that sense too. That's been working for traders as we kind of, it's been very methodical over the last month or so, and even like the end of the week we've been seeing just stronger price action. But it can really make a difference right now in your P&L if you're, adding when on green days, or if you're, doing right now, which has been the right thing, which is selling into strength,
Mhm.
versus adding, so, that's another thing just to be cognizant of what type of market you're in. And at least like on days like we saw on Friday, like my goal is to say, hey, well, I can add a couple trades if I want to, but I really want to be a net seller overall, so that I'm doing the right thing until we actually break that range, which again, we're trying to do in the queues. So it really depends on what names you're concentrating on. But I brought up just another example. We went over the indices, but
Mhm.
Nvidia has been a really good example too,
Yes.
where this has been a tough trade to be in, because for a while, what I was seeing on Twitter was everybody saying, hey, this this should be shorted, right? That, the valuation is super high.
Mhm.
And it the valuation has always been high in Nvidia. That
Mhm.
has never been really the reason to sell Nvidia. But I still will, I understand that there's a lot of people who are out there who are trying to short it. And sure, if I'm going to protect my long, if we go ahead and break the range. So one of the things, like this is a good example, which if I can try to bring this up, um, and do it the right way. But if we look at this, without the valuaries, and what I saw a lot of people
Mhm.
doing recently, which was, how do I cover this up? If I go from, if I put in '03 to basically, we'll go right to the end of, right, so that you can't see this. So a lot of people were saying like, okay, like they were drawing trend lines and they were basically doing this type of analysis where, and I apologize, I should have done this beforehand,
Oh, this
but
is great to see you do it in
they,
action. I
they
like
were
it.
doing, yeah, thank you. I'll
That's
try.
great.
But they were doing something like this. They were drawing two trend lines,
Oh,
and
yeah.
then they were going with an arrow, and they were saying like, okay, once this thing breaks, we're probably going to go down to here. So very
Yeah.
simplistic, right? When you look at this and drawing two trend lines and saying it's going to get to a point and then it's going to break and it's going to go lower. Sure, that's a conclusion that you could have come up with. And really what helped us here is, so going back to where we were as I drew this,
Mhm.
towards the end of the month of March, right? So now we only have the active month lit up here because that's the
Mhm.
most important thing. But notice as we started to kind of come in a little bit, the bears really got excited, especially on this
Mhm.
particular day. But we really just tested that top of value, and you
Yeah.
could see that we like it held it like a champ. So a couple of times it tested this excuse me 262 level, but it
Wow.
never broke. I mean, there was a big test on this day on 425, and it looked like, geez, that's not good. It closed on the lows, but the very next day it kind of moved back up, stayed in the
Mhm.
range, and it really kind of helped me stay in along. And I
Mhm.
was getting nervous about this, and I think I did reduce my risk. And I've done this a couple times in Nvidia where I've taken profits into strength and I've reduced my risk at the right place. And if we did look like we were starting to move down, I think
Mhm.
at one point I was completely out of Nvidia before going back into it, noticing that like, we actually held in there, right? And then as we got to the end of the month,
Wow, look at
this is
that.
April, then we
Yeah.
started to resolve higher. So
Mhm.
now that we're, again, as we approached or we started in May, we had another test in here. We started the month above value. We came back and tested, right? So this
Mhm.
is, as long as we held on to this top of value, right? This was a place to add, right? And the last 2 days have been pretty strong. Now
Yeah.
notice that red line. Sorry, go ahead if you had any
Oh,
questions.
I was just going to say it's apparently in a nice uptrend. And when you say you reduce your risk, what strategies do you like to use? Do you sell covered calls or do you just take profits, like you said, and go into liquidating some of your position?
Just liquidating my long, right? I'm not doing anything really fancy. I try to add a little bit. So I've been keeping like a core position. And when we get a little bit of a dip into support, as long as like if I did the right thing and sold into strength,
Mm-hmm.
then I'm leaving myself a lot of flexibility, which I think is what you have to do in this market. Personally, anytime where I take an outside position in this market, I either I get frustrated by the price action. I'm looking at my P&L too much. But if you leave yourself that room, so that wiggle room where you can add a little bit into weakness, right? And you just don't want to
Yes,
you just don't want to corner yourself
that's it.
into a spot in the market, because you will get frustrated, I think, in
Mhm.
this market,
It's
or
about remaining flexible
yeah.
and giving yourself those options, those different ways you can go depending on the way it goes. Because it's like you said about Drunken Miller. I love that him saying that. I always say the same thing. You always reserve the right to change your mind when new information is presented, and so just remain flexible because there certainly is a lot of new information coming every day that can change. Any of this can change at any time. So I love that strategy, Christian. And I'm going to call you Professor Christian. You're a great teacher. I love this. You're demonstrating this with the charts, and you have to tell us what those orange venom points are in there as well. The top one, I guess, is a resistance.
Yeah, so this it's red on my screen, but it may be oranged. But yeah, so this is the virgin point of control, right? And this is the area that I would be looking to be a seller at. So I've mentioned this a couple of times on Twitter that I'm targeting 300. Now again, I'm not going to stay like, anchored to my belief. If this if this were to break last week, and like I said, I think at one point I was out of Nvidia completely last week because I thought it was probably on this day, but I picked it up like the very next day. So that's one thing too. Like, this market will give you opportunities to kind of get back into names. So I liquidated on one day, and I think I was back in it, the next day, provided that it did not break. But yeah, so the overhead supply, virgin point of control, is at 300, and for me, like that's where I'm looking to take my my final exit in this trade.
Very nice. I like that. So we know semiconductors have, I remember last time we spoke, they were doing well. So they've been doing quite well. And then the biotechs. Have you been looking at the biotechs? I've traded the XBI quite a bit. And throughout actually the past year, I think I've been in and out of that one, or Labu as well. I'm not in Labu now, but the biotechs, and then there's that new drug, I think it's NVO, that has the obesity drug, and that has been hot as well. So I think medicine is hot. I think necessities are in cybersecurity. I've been in cybersecurity forever as well. Zscaler came out with some great stuff. And and Fortinet and Palo Alto. I like all those names. And they've been working. Are you in any of those?
I have not been. I've been in and out of the cyber names. It's been a tricky space for me. I've tried trading Palo Alto a couple times. One of the also trying to think of the right. It's been a long day, but one of the styles that I use is I'm a trend trader. So I generally stay away from things below the 200-day moving average. I will also, for the most part, stay away if it's trending below its value area on the long side. You could short in those situations, but
you short?
I do from time to time. I'm holding one like hedge for the most part. Like I'll use the indices to basically put on a hedge. I haven't really been actively shorting too much. Because I just think it's difficult to go back and forth from one side to the other. So if we're range bound as we are, I rather do things like, buy the dip and sell the rip a bit. But I think if you're starting to do that a lot with shorts as well, you really need to be able to kind of pick your names, because you don't want to get caught in a name that, on the short side that ends up outperforming, because that could really cut into your cut into your long exposure. So basically what I'm for the most part, I'm using the indices to kind of short a little bit. When I think things are breaking down, I'll basically just try to neutralize some or all of my exposure, so that if we are starting to really break down, I'm covered and I'm minimizing the impact. So that's what I found over the years. I find it's, unless we're really trending down, the indices, then I may be a bit more active shorting, but for the most part, I'm usually the majority of what I do is on the long side. To answer your question about biotech, so this was kind of rough for me because so I like to trade the ETFs, because I'm not a biotech expert. I don't pretend to be, and I don't like when there's some unknown drug study that comes out in a small cap name and the stock goes from $20 to $5. Now, luckily, there hasn't been too many of those. There's been, what we've been seeing over the last like month or so is there's been a lot of M&A.
They have been consistent.
Yeah. So there's been a number of deals over the last month, and there's been some positive drug studies. So I don't know the reason. I'm not smart enough to know the reason why the drug
Oh,
studies are coming out better.
yeah,
Like Lilly, had a nice move and nice, upgrades. But usually I'm taking smaller positions in these things because I'm so worried about the risk and something coming out that I'm just,
absolutely.
once a bad drug study comes out, your trade is just shot. So
Oh,
I
no.
like diversifying away the single stock risk with the ETF. However, you're not going to catch some of these crazy moves like a Lilly or like a what is it, NVO? No,
Yes.
I
Yeah.
mean they've been monster moves, and
Crazy. But it can go like you said, it can go the other way, and there you go. So it's a high risk, high reward. So
and
yeah.
and if I do get in the name, it's all about, taking targets so that you're taking off, part of your trade at profits. So this way, if the trade does come undone because of something bad that comes out, at least you wrapped up like
Is
two
this
thirds or
which
three
one's
quarters.
this one?
This is VKTX. I mean,
Ah,
there's a number of these
yeah.
things that have just been, absolutely on fire. And I think this one actually does have data that's coming out.
Ooh.
APLS has been another one. There's just a so it's been, I think for the small cap biotech investor, the last few months have been a lot of fun for them. I am looking for this, like now that we're back above for XBI, we just have to get through this overhead resistance, which is 86.11. And then we'll see. I mean, I'm very hopeful that biotech can really begin to trend. A lot of
Mhm.
these bigger pharma companies seem like they have an appetite for more further M&A. So I'm optimistic. So I get very optimistic when price is above its 200-day moving
Mhm.
average,
Of
and I
course.
get very pessimistic when the price is below the 200-day moving average.
Absolutely. I don't blame you. Another sector that's been very strong has been the beauty.
Yep.
There's the Elf, Ulta, they've all been holding pretty strongly. I guess that's something people don't sell in this type of market. I mean, yeah, look at that. It's been definitely a nice upward trend. And right now it's right in the middle of that value area. Is that what
Yeah,
you
it's
call it?
yeah, so it's right in the middle. So, it's range bound for the month. But that doesn't mean that, even if it moves back up to that top of value, like, so that would be a place if it, and here's where I use I cheat and use the moving averages a little bit. If it can get above these two short-term moving averages, I like that. I view that as a sign of strength. So if, let's say tomorrow it hops over, both of the 5-day and the 20-day moving
Mm-hmm.
average, then I'm all aboard and basically just looking for a healthy target up at that top of value at 97.
Nice.
So that's how I would play that trade. And then again, it doesn't mean that just because you get to the top of value that it's going to get rejected, but more often than not, unless you really get some huge buying, you're probably going to pause there. So it's good to kind of, for me, for being a swing trader, to sell a good portion of the trade and then be patient and watch what it does at that 97 level.
Very nice. So, like we said, it's always about the future. I mean, that's as investors, as traders, we're focused on the future. So, when you look at all these charts,
Yep.
and you are an expert in this. I know you're not an expert in biotechs and banks and a banking expert or anything, but you are an expert in this amazing system that you have. Very impressive,
Thank you.
Christian. And what are you seeing in the indices, in the sectors, in the individual stocks? How are you feeling confidence wise? Of course, it can change in a day and right away, but what are you overall? What is your gut feeling on the way things are going and how they're shaping up for now in the next 3 to 6 months?
Well, yeah, it's a complicated question, complicated market, because again, you have the macro forces,
Mm-hmm.
and we've
Of
got some
course,
events
yeah.
that we have to get through. But when I go through the charts and when I'm looking at the charts, one of the things that I like to see is, when I'm going through,
Mm-hmm.
and scanning through names, is I like to see more. If it's just one or two names that only look okay, then we got a problem. If it's more than that, if I'm seeing a lot of good setups, then I really think that the market is constructive. I also like to look at, you'll hear me a lot of times talk about market breadth.
Yes.
And there's some nice measures to look at. Like I'm all about looking at the
Yeah.
McClellan Summation Index. That will tell you if there's, it's very important to know if the analogy that I use is whether the wind is at your back or the wind is at your face.
Mm-hmm.
If we've got like poor market breadth, then the wind is at your face as a stock picker. You're running into a head-on wind. If breadth is positive and there's more names that are going up versus going down, you're in an easier environment. And think of it as a runner with a tailwind, right? It's so much better if when you're running, when you have the wind at your back. And that's how it is for stock picking, because even if you have no edge whatsoever, right, and you're picking 10 names out of the market, right, and if it's poor breadth, you're going to have 6 or 7 names that are going down and only 3 names that are going up, and vice versa. If there's positive breadth, right, then it's just easier as a stock picker. So you want to know where your odds, right? One of the things about trading and stocks is its probabilities. So you want the probabilities on your side. That could just make your results that much better. So it's important to pay attention to whether or not the overall market, whether breadth is expanding or contracting. And right now we're kind of like in the middle. If you look at that McClellan Summation Index, which I don't have in front of me, like and overlay that with a 10-day moving average,
Mm-hmm.
the line is currently below that 10-day moving average, but it's close. I mean, we started to see breadth move back up on Friday. I also use that. I have a quick indicator that looks at what's called up volume versus down volume,
Mm-hmm.
just to give you a sense of like for the day, if buyers are in control or if sellers are in control. So
Yeah.
that's basically just a little bit of the thought process behind it. But I view this market, there's a lot of rotation, which is not a bad thing. You mentioned
Mm-hmm.
the semiconductors. The semiconductors were hot for a couple weeks, and then
Mm-hmm.
they really cooled off too.
Yeah,
Um,
absolutely.
but what I like is that, and that's quite normal. Um, but I like that buyers are trying to step back in a little bit to the semis. They've been
Mm-hmm.
underneath the 50-day moving average for a week or so, but again,
Yeah.
in value for the month. But for a trade, possibly can move up about $3
Yeah.
before they hit resistance. So
Definitely been a tradable sector. A lot of opportunities here and there, and the individual names, and SMCI. I don't know. It's not really a semiconductor, but it's like a mix of all kinds of. Oh, there it is, right there.
yeah,
That's been one of my babies for a long time. Actually, I think we talked about it last time. Did you ever hop into this one?
I have I basically have 2 portfolios. I have one that's for more longer term, and I
Mm-hmm.
do have like a tiny weight in SMCI, which I
This was a long for me. I've like not to trading, but I was just holding on since like last April, I think. I don't know, sometime last spring. But it's a great company, and they have good earnings. They've had good earnings, and yeah, look at that rise there. What do you make of that with your analysis and your
yeah.
charts? When
Yeah.
you see that, is that like a sell signal to you, or what do you make of that?
Well, this has been a really tricky one because so I mentioned that I've got like a longer term position, small position in it, but in my trading account, I've
Mm-hmm.
missed the boat on it. When they had earnings, I just didn't understand. And this is how funny earnings are, because I read the earnings report. I didn't listen to the earnings call, to be honest, but I
Mm-hmm.
read the earnings report and I'm like, they
It's
seem,
okay.
yeah, it's okay. And really, I guess where the growth was is that they mentioned their guidance was
Yeah,
pretty
exactly. The
good.
guidance.
Yeah, the guidance was strong. So unfortunately for me, and this is sometimes how it works on earnings, is I just missed it. I didn't believe that the name was going to go up from one, it hopped above the value area on earnings day, which is good,
Mm-hmm.
but
Mm-hmm.
I just didn't have the confidence, and you need confidence in your trades. If you don't have that conviction or confidence, then you're sunk before you even start the trade. So you really have to kind of believe in it. But I didn't believe that the thing was going to go from 117 to 136 on the earnings day. So since then,
I
what
didn't
I
either. I
yeah,
don't.
so So at this point, I'm not in it in my trading account. What I'm looking for is just consolidation. I'm waiting for like,
Yes.
the 20-day moving average is all the way down here. I'm waiting for just sideways back and fill. And then if it
Tightening
begins,
up. Yeah.
yeah, if the price action tightens up and we see some type of a dip or check back, then I begin to get interested
Hmm.
again. But I'm certainly like with this market, not going to chase
No.
the price action up here. I'm going to wait until it settles in. And if it doesn't, if it continues to run, then there's so many other stocks out there. We'll try to find the next
Yeah,
one. But
absolutely. There are plenty of opportunities and no reason to chase something like this. And I agree with you. I thought their earnings were they were lower than year before and same quarter, and they were higher than last quarter, but they were lower than a year before
Mhm.
quarter. And they've had amazing stellar earnings. I mean, that beautiful earnings last year. They were always like they'd raise them, then they'd come out, they beat them, and then they raise them again. It was like beautiful. This one was okay. The guidance was the best part of it. And that to me, I always talk about guidance is so important because it's about the future, but I wasn't that impressed. So I took quite a bit of profits on this one after that. And,
and
because in this market, liquidity is great. And I like having more liquidity.
and I'm not, like I'm more of a technical trader than I am fundamental, but I still I don't ignore the fundamentals.
Look at that.
And it's
Wow.
the
Wow.
PE is still it, even though it's progressed so much, it's still not an expensive company. It's
No.
still the PE is less than 13. So that's why like it's important to one of the things that I think younger traders make the mistake of is they think that that the stock has gone up too much and they're like, oh, I missed it, and then they try to find some other company that may be in its industry that the price is down. Well, price is
Hmm.
down for a reason. Like I always try to stick with the winners, so that's why like again, like I'm not going to buy it up here, but if it even just comes in and settles down a little bit, it doesn't
Yeah.
have to retrace all the way down to 112.
Hmm.
Half that way would be wonderful. But even just a little bit, even basically down, down to like 130, as long as it kind of, the technicals are starting to kind of like the 20-day moving averages
Yes.
catches up a little bit. I love, the fact of returning to companies that are strong.
Exactly.
So I would say if you're new, like don't think that, just because a name has gone up, that's a bad thing and you can't get involved.
I
The
love
name
that.
will
Yeah.
give you some chances. Some it depends on how strong the company is. If it's super strong, it it will not, unfortunately, it won't pull back that much. But that's
Hmm.
also a sign of strength too. So
Excellent points. I'm telling you, you're a professor. This is exactly right because, this is like because you've seen that strength, it has that history of strength. It may not be the right time to enter now, but doesn't mean you should just put it aside and forget about it and look for something else. It means, keep it on your watch list, see how the price consolidates and how if it bounces off any supports and then there could be a good entry because it has excellent fundamentals, compared to many companies out there, especially in this environment where margins are compressed, even the top number is coming down on many companies, demand's pulling back. It's a tough financial environment. And to see a company that's able to keep its margins, they were increasing, and great earnings per share increasing, from last quarter, and to see that, in this market and the strength, it's definitely one to keep on watch, I would say, like you said. I
yeah,
want to,
and it's
yeah, go.
given like if you look at the pattern too,
Yeah.
it's had situations where it's ripped and then
Yeah.
it's really come in.
Yeah. And
So
then there it goes again. You see that one, it rips again, then it
right.
pulls in, then it rips again. I mean, hey, you catch it on the right way, it's you do pretty well. And it was hard, it's hard holding on when you see it down, but it's part of being a long-term holder. And I've sold quite a bit of cover calls on this number, this name. I was going to ask you about the VIX. We
Sure.
talked about how there's so much uncertainty with so much data coming out, and then the
Right.
banking crisis. I mean, you're hearing different banks are failing. And why is the VIX so low? Do you have your own thesis on why it's under 17 today?
I do. And it's basically just the definition of what the VIX. I think part of the problem with the VIX is that people think that it is something that it's not. Um, so for example, right, you hear all these labels about the VIX. Oh, it's the fear index, or it's measured like that's not what it measures. It measures 30-day implied volatility in the S&P, and that's all it does. There's no psychological levels behind that. It's just all it's measuring is just 30-day implied volatility in the S&P. So let's go back to our chart in the S&P. Right?
Mm-hmm.
Have, the question, I think up until I forget when it was, but I think it was a couple of weeks ago, people were saying that the S&P hadn't moved in over 1% in a couple of
Mm-hmm.
weeks. So you're just not getting, there's not, the volatility is just not there in the market. And
Mm-hmm.
the VIX is speaking to so the VIX is doing exactly what it should be doing. It's telling you that the market just doesn't have volatility right now. Now, that could change if the volatility starts to pick up, but again, 30 days out is very short term. So again, even though we have this debt ceiling issue,
Mm-hmm.
we're still like the price action is just not like, even like look at today's price action. We didn't go anywhere. So if the VIX was, it would be more of a situation if, or more of a problem if the VIX was reading at like 25 to 30 when the price action wasn't quantifying that. I think the VIX is doing exactly what its job is doing. It's telling you that the price action just is not that large right now, and you don't have to go very far, right? And like, so I see people do this mistake all the time. They're like, well, geez, look at what IWM is doing. Well, okay, well, look at the volatility for the Russell then. Don't look at the VIX is telling you the S&P volatility. It's not
Mm-hmm.
telling you what small cap. It has nothing to do with small caps. Or they'll say some other thing. Oh, look at this. How come the VIX isn't moving like this?
Yeah.
Because it doesn't measure that. It has nothing to do with that. So, yeah, I mean, you could look at like, there is a measure for volatility for IWM, and that's RVX, right? And that did move from, 25 all the way up to 35, right? In the
Mm-hmm.
last couple months. So it's, and notice that it did move up as well from 22 to 27. So it didn't make a higher peak. So some people would actually call that like a little bit of a diversion, even though
Mm-hmm.
the IWM, where we didn't go over the IWM and what that looks like, but it didn't make a new low, but it tested the low for March. But the
Okay, let's look
volatility,
at IWM on your chart analysis. Let's see how it looks like with the value area.
yeah,
Ooh,
so we could do that, and then we'll talk about the volatility,
yeah.
because I think there is something to that. But same
Mm-hmm.
thing, we've been in value all year long, since we opened up the year. We did get rejected at that top of value. So again, noticing that how significant this is,
Yeah.
because it got rejected at 195.87, the top of value. It's also come down and tested back in March, the low in 165.67, and it's held, and it didn't come down there and test. So that's what it looks like on the weekly. So again, the support to watch is 165.67. Um, and if we look at the daily chart, notice like today, for example, the small caps were leading as we were going into the opening today, and they don't want to turn the corner yet.
Mm-hmm.
Also notice a couple times, and we could look at this last month too. It was having trouble, right? It was testing this top of value once, twice, three, four, five, six, seven, eight, nine, almost 10 candles tested this top of value,
Wow.
which was right around like the 179 range, and it could not break it. So I looked at this a couple of times, and I was ready to go long IWM if it
Mm-hmm.
provided the backup in the price action with this value area. It didn't do it.
Mm-hmm.
So notice again, it's kind of struggling with this bottom of value this time.
Mm-hmm.
It started the month inside value, then it broke below.
Yeah.
Here's your one rejection, two, three, four candles. So it is not strong. It is the weakest of the three. And I think if you're looking to get involved here, patience is the key, and let the price action confirm it for you. Like, and even if you're not using, the valuaries like I am, even something simple like the 50-day moving average, right? Until this thing gets above the 50-day moving average, it's weakness that this is exhibiting. So I like to have that confirmation either using the valuaries, and I like to use the moving averages too. And if I see a break of a level along with the moving average, then it's like double confirmation for me.
Mm-hmm.
But this is why I would say to stay patient, because it could just be a matter of time. Because on this last bout of volatility that we saw last week, and where IWM came close to testing those March lows, notice that the volatility did not spike up like it did in March. So it's actually settling in here in the
Mm-hmm.
lower 20s. So again, still more volatile than the S&P, and definitely, the Qs. The Qs, I think, is VXN, which again, like the volatilities, I
Mm-hmm.
don't know why you have these crazy wicks on here, but this is not very volatile either. It's staying around 20. So yeah, I mean, it's important. Like, so the 30-day volatility is not the only volatility measure that I look at.
Mm-hmm.
I do look at like I'll look at skew, which measures
Oh yeah.
the out of the money options, because again, the VIX or RVX or VXN is looking at the money options, and the skew is looking at tail risk. It's looking to
Mm-hmm.
see if there's anything but that's not even pricing in anything major. It's a little bit heightened. So it's interesting, we go back to that. I wonder if they do get this debt deal done, that you're going to
Mm-hmm.
see that credit default risk evaporate in terms of that.
Mm-hmm.
But so you have to kind of
Interesting.
go back. So here's skew. It's a little bit heightened, right? It's not at the low point where it was, but it's not also, extreme where we saw it get, interesting that it really kind of crept up here in the middle of 2021 before the market started to spill over. So things
That's
like this can
interesting. That's
yeah,
a good telling sign of what's to come. Look at that.
yeah, this
Wow.
was good, and again, you want to use these indicators like skew or like the VIX or some of the other things that you may use in conjunction with other things. Like I will never look at one thing. This
Mm-hmm.
is where, again, I've learned over the years, because I see people do this on Twitter, and I cringe, because
Mm-hmm.
they'll look at one data point or one indicator,
Mm-hmm.
and then they'll create a whole narrative based on that indicator and say that, oh, we're going higher, we're going lower. A lot of the times it's these folks seem to want to do it on the downside. Like, oh, I've seen this one thing and that means we're going lower. And it's like, come on, buddy, use this with some of your other tools in the toolbox to come up with a little bit more of a powerful view than just, oh my God, this one thing is startling. So that's why, we could talk about that CDX and,
Yeah.
say that, oh my God, it's so bad. But I
Mm-hmm.
think you want to look at some of these other things too. And I'm trying to think how I brought that up the other day, but
That's
I think it's
exactly right.
sovereign. Sometimes if I type it in, but I forget oh, here it is. I think this
Oh,
is it. If it's not SVOM, it's the other one. No, it's the other one. So it is.
SOV.
It's SOVR. I forget the two. So
Oh,
here's the
okay.
United States, right? And if we look at the chart here,
Price graph. Okay.
right?
Nice.
So yeah, I mean, this is out of hand, right? I mean,
Oh,
so
yeah. Look
you
at
know,
that.
this is, and if you go back and look to see when the last peak was, it was 2008, 2009.
Mhm.
Now, this doesn't mean I want to go out and sell everything that I own and, oh my God, it's bearish.
It
But
doesn't mean it's 2008 all over again either.
right, but does it mean that I may want to add a hedge?
Mm.
For me, yeah, if something is perking up like this that much, do I want to, hedge my whole portfolio? No, because I know that if we break support, the S&P hasn't broken any support. So like you have to ask yourself what you're hedging, right? Are you hedging a small move, or, you know, if we start to kind of really break this this, we could call it the triangle of death if we want, but if we really start to move to break this, how far down is this? Like 1-2%, probably along those lines. If we break that, like I'm okay with, my whole portfolio loses, if I have to get out of trades and I lose a little bit, I'm okay with that. That's the price of doing business. So if we really start to kind of break apart quickly, yes, it would be nice to have a hedge on to kind of buffer you a little bit so that you can get out of your positions comfortably. But once we break a range, right, then I'm peeling off positions, that I own.
You're going more into cash in your trading account and you're
Right.
liquidating positions rather than shorting or putting hedges on. So allocation wise, in this market, have you increased your allocation than compared to last year's market where it was very volatile?
That's a great question. So I just wanted to finish this point too.
Yeah, please.
When you're looking at a chart and so forth, what you want to do is plan out your decisions ahead of time before when the market's open and when we do have volatility, either, when the market's moving up or moving down, right? You want to be able to, you don't want to get caught in the moment. Another thing that I heard from Buffett this weekend, I listened. I don't know if you had a chance to listen to any of
A
that.
little bit, but yeah, great
Yes,
stuff.
there's always these good tidbits. So whether it's listening to Drunken Miller or Warren Buffett,
Wow. Yeah.
I always take little bits of information, and there was a question he was taking questions both from the audience and from CNBC, and one of the questions from the audience was to both Buffett and to Charlie Munger was, do you ever make an unemotional decision? And they said the first, it was kind of funny. Buffett, I like Buffett's humor, and he said, "Well, he's like, I've made emotional decisions outside of investing, but in investing, no, we've never made an emotional decision in investing." And I was like, really, that's amazing for them to say that. And it makes you think, like, in your trading career, have you ever made an emotional decision? And
Yes.
sure, like I've made,
Yes.
it happens, and not, we're human, right?
Yeah,
We're not
absolutely.
bots. So I for one was dumbfounded, and I'm not sure if I totally believe that they've never made emotional decision over their whole, you know, however long 50-year career plus probably for the two of them. But what you try to do is at least limit emotional decisions. So if you could think about where you're going to sell and where you're going to buy ahead of time so that you're not caught in the movement, like planning these things
Planning.
out while the market is closed and while there's no emotions on the table
Exactly.
is very important. So
Love that.
that's what
It's
I mean, like in terms of like if we do break the range, like are you comfortable with a 1% drawdown on your positions? If you're not, then you probably want to reduce your risk. If you're comfortable with that, then it's the risk of business, right? And that's how you kind of plan out your decisions so that you don't have unfavorable outcomes. So your question was about holding different size or different different positions. Probably it's been like different areas of 2000 and what was last year, 2022
Yeah, that's
versus this year. I've gone down from this year from almost 100% cash to where I've got a number of positions on. Right now I have a number of positions on, but when we broke this range back in where
March.
was it? March. Yeah,
Yeah.
I immediately went almost to, I think I was holding
I
one or
sold a lot
two.
then. Yeah.
Yeah, I was holding one or two positions. We really got rejected here at the bottom of value in the beginning of March. And by doing that, this is really like the where it really comes in key in trading is I really played March very well. I think a number of other traders did well as well by really being a risk manager and reducing your positions once you saw volatility creep in, and then I was really able to kind of counter where the month was as the month progressed. But don't be afraid. Like, if you start to see things and having that plan. So I really didn't have much of a drawdown because I just kind of, did very well with staying out of the market. once we kind of broke that 200-day moving average and we're sitting below the value area for the month. So it really ranges. You know, if I'm seeing really good price action, you know, even though that the indices are kind of locked in here, if I'm seeing more setups, I'm going to add more risk. But I always like, you know, try to review my positions. One of the things that people always talk about, you know, good or bad, is like either keeping a diary or a journal of your trades. One of the things that I do is I keep all my trades in an Excel spreadsheet. You know, I have
Mm.
Bloomberg, so I have live quotes. And as I'm doing that, like I'll update my spreadsheet as the day, like once we get through like the first couple hours of the trading day, usually around lunchtime. And if I'm looking and I'm like, geez, if I have too many positions on, I got to pick one or two and reduce my risk so that I'm not just crazy, you know, taking on too much risk. So I don't keep a journal anymore. Like I used to do
Mhm.
that a little bit. I used to put all my trades in a spreadsheet. Now I just keep my whole portfolio in the spreadsheet, and it really kind of helps me monitor whether or not I have too many positions on it. And again, that takes a little bit of feel. It takes a little bit of comfort level on, you know, on how many positions you feel you're comfortable with. You know, also taking multiple targets helps me kind of stay in some trades a little bit longer, knowing that I've kind of scaled out of the position. You know, so there's a bunch of techniques, but really it comes with a lot of trial and error.
Absolutely. You learn through experience.
Yep.
And, you know, I wanted to ask you about your positioning. And I think you just said it. You scale out and you take profits as you get out. Do you also scale into positions? Has your strategy changed in this type of market with the sideways SPX? Do you do it any differently, or are you someone who does progressive exposure?
Yeah, and I mean that's what's really interesting about the market is we're always like adjusting and coming up
Exactly.
with new rules. And you know, for as long as I've been doing this, right? Like I don't have a situation, like I don't have I have ideas and I have a framework, but I'm always going to adapt to what the market's giving me. I
Yes.
mean, the fact that we keep getting to the high end of the range and then selling off
Mm.
um is frustrating, but at least like if you're making some adjustments, you can kind of make it through this market, which is very challenging. This is one of the most challenging markets I've ever seen. So if you're not adjusting your trading plan a little bit to this, but yeah, I mean, I took a position in Salesforce today, and it's not there yet. It started to go again. This is what's always tricky about trading,
Hmm.
but you know, I mentioned in my trading room, let's see if I can.
I
I
like
was
that
gonna,
sideways
but
action.
but yeah, I scaled in like in the very beginning of the day,
Hmm.
and you know I mentioned it to you know traders at Tribeca Trade Group. I said, hey, I may have multiple entry points in this, and if the problem is like in this market, if you go too big on your first entry point and you don't get what you're looking for, yeah, like I said, as we talked about earlier, you don't want to
Hmm.
back yourself into a corner where you
Hmm.
can't be patient. You really need to be patient in this market because Salesforce, it may go sideways for like, it could go sideways for another couple of weeks, right? I mean, it has earnings in a couple of weeks, and I hope it doesn't
Hmm.
do that. But
Hmm.
you have to leave yourself the flexibility. So, you know, I'm looking for a break right now of basically 199, and it didn't close there. So I have my position on. You know, you can also at the end of the day, if you start to scale into a position and you don't think it's not doing what you envisioned it was going to do, you can also take a portion of that position off so that you can live to fight another day and wait for the signal to mature. So the more that you can get over this, oh, I gotta be right. I'm afraid I'm gonna be wrong in this trade. You gotta like completely remove the ego and say, okay, you know, it's not doing what I wanted it to do. Now it's not far from, you know, where I need it to break out. And I think it's got a decent chance, provided that the market is somewhat constructive this week. Because I like this on multiple, if we go back to, you know, multiple time frames, notice that this is right at the top of value.
Hmm.
And I like the fact that it's been consolidating here. So it just needs to get over this level. And who knows, it may not do it till earnings, but
So, like on that position right there, are you
yeah.
giving yourself a stop loss for
Oh
risk
yeah.
management? And what
Yep.
type of stop loss on this stock does it depend on the stock? Is it the situation, or is there a fixed number, like the max that you will take as a stop loss?
I mean, I basically just do like back of the envelope type of calculation in
Okay.
terms of like I always want to be cognizant of the risk. And I know like some of the stuff you kind of just develop a feel for after a while, but you
Mm-hmm.
could look at ATR, average true range. So
Mm-hmm.
if you're not familiar, like, or if you're going to trade a new name that you've never traded before, one of the first things that you could do is look at the average true range, because that will tell you how much the stock moves. So you get a sense of the stock's volatility. So if the stock moves like $5 a day, right, then, and Salesforce only moves, let's say, $2 a day, right? You know that with that $5 position, you don't need as many shares because the volatility is just greater. Now you could put this and plug this into a spreadsheet and do the math. But as long as you like, depending on how technical you want to be, but just knowing like something is 2 or 3 times more volatile than one name versus the other, that could tell you, okay, I really need to put on a smaller position with the volatile name versus putting on a little bit of a bigger position, because that could be frustrating too.
Mm-hmm.
Sometimes if you use the same position size and you get the name to move the way you want it to, but you don't have a big enough position on, and you're like, wow, I got this trade to really work, but I
Mm-hmm.
didn't make much money on it. So
Mm-hmm.
you have to be cognizant of how the name moves so that you could size it appropriately based on its own volatility. So yeah, so something like this, my stop price, I would rather operate with a little bit more of a cushion,
Mm-hmm.
which is basically, down to like 192, right? And even there, you still have the 50-day moving average. So I would rather go in smaller so that I give myself a little bit more cushion, because it's very frustrating. And I've dealt with this many times this year where, geez, you put your stop price too tight, you stop yourself out, and it does, sometimes it's not the next day, but 2 or 3 days later, the stock did what you wanted it to do,
Mm-hmm.
but you were just too rigid with your stop price and you went in too large.
Exactly. It's about being flexible and not going in too large, reduced position sizing. I've been saying for the past year. I mean, in this type of market, I've been definitely using reduced position size, especially on volatile names. It's better to have that flexibility. So I think it's a great time for us to talk about mindset, psychology, and risk management, because they're all interrelated. And you mentioned a great, look, there's always so much wisdom to learn from the greats like Buffett. I mean, Munger, Drunken Miller, all these guys, Paul Tudor Jones. I mean, there's so much to be learned from these people. And, him saying that he's never made an emotional decision, maybe he forgot. I mean, I don't know, but, at his age,
Right.
maybe. But, it's how do you, Christian, you're so experienced, and I have to say you're fantastic with all this. And I've always, we've met before, and I've always enjoyed your trading style, and the way you teach it is just amazing. So tell us about your processes and how you minimize we all have emotions, we're human. So how do you minimize the responses, the reaction, and the impulsiveness from that emotion?
Well, I mean, so again, thank you very much. That's very nice of you to say all those positives. And yeah, I mean, it's tough. I mean, it's a constant battle with your psyche on a day-to-day basis, and um, you have to kind of realize that. So I have certain things like that I try to help myself with. And again, it's sometimes you just have to go through this as a trader, where I've had bad weeks or I've had a bad month. And what I really try to do is minimize that. I try to minimize things so that it's a bad day versus a bad week or a bad month.
Mm-hmm.
But I'll tell you, I had a bad week at the end of April. I was sitting in April. I thought it was a very frustrating month. We heard about the seasonality was supposed to be stronger,
Mm-hmm.
and the market really just didn't do anything. And I was sitting as we got closer to the end of the month of April. which was back in here, my P&L was basically about flat for the month. And I was like, geez, I really want to have a positive month. I really, we've been going this back and forth price action. And like, I was even, I was a bit frustrated, and I made a couple bad mistakes at the end of the month. And I was upfront with my members, and I said, geez, I really screwed up a couple things here. And I said, okay, that this happens. I try to really only minimize it. So the thinking is like, it's okay everybody's going to have a bad day from time to time. You're human. The market's going to move against you sometimes. There's going to be some type of, announcement in a name that you can't predict prices.
Mm-hmm.
So it's really how you handle that. So I really try to understand that bad days are going to happen, but I don't want to make them into much more of that, because if you let your ego get involved, yes, you can really turn, a bad day into a bad week into a bad month. So it's rare for me to do that, but I did have I had one bad day, and it was followed up by like the next day was bad, and like two or three things went bad for me. But it's important to kind of take a step back and realize these things happen. So, if you need to take a little bit of a break, go for a walk. Sometimes even the weekend helps. When I'm really not trading well, as I wasn't at the end of April, I was like, I can't wait till the weekend is here, because I just need to regroup a little bit. And by the time you have that break, your mind will sometimes, it will just give you a refresher. And if you get yourself, just get yourself out of that situation, whether it's going for a walk or taking a day or two off, you'll regroup. And I know myself, at this point, I'm a competitive person, but I know that I'll be able to kind of get out of that bad mindset, where sometimes you do get focused on your P&L. And in that sense, I was making a couple, what did I call them? And I even put this on Twitter. I said, I made a couple like really amateur rookie mistakes. Listen, it happens. It
Mm-hmm.
happens in sports, like in any sport too. It's, you will have guys who bat, baseball. Let's talk about baseball because it's
Mm-hmm.
baseball season. If it was football, I'd talk about football season. But you'll have guys who will bat 320, 330. Some of my favorite players back in the day was Don Mattingly. I'm going back into the
Mm-hmm. I remember them.
back into
I
the
I
80s and
had
the
that baseball card, Don Mattingly.
yeah, I still have it someplace. But Wade Boggs, right? And even if you
Oh
go
yeah, I
further,
remember him. I love that time period, the
yeah,
80s.
such a consistent hitter, or even like an
Mm-hmm.
Ichiro. But these guys were very consistent batting in the 300s. But it doesn't mean like
How
they
about
could have.
Jose Canseco? He was good, right?
He was good, but he wasn't a consistent hitter. Like
Nah.
he was fun to watch, and
Mm-hmm.
an exciting player.
Yeah, exciting.
But
Mm-hmm.
I always liked the guys who were consistent.
The
And
consistency, yeah.
so they would go through a game and they would make mistakes. They would have strikeouts. So it's all part of that. And or they would go through a slump, right? And they would be,
Mm-hmm.
they would be 1 for 8 and given a series or something like that. But they would always be able to bounce back. And I always admired that they would be able to recover and get out of the situation. So, that's really where mindset comes into play, and you have to be competitive, and you have to be tough too. I mean, so sports have helped me. I've played sports all my life when I was younger, and understanding that there's always the next play, or there's always the next game. And I've had horrible situations where I've dropped the pass and playing football, or struck out or something like that. But how you bounce back, and that just comes with the lesson of playing competitive sports. And it's very similar to playing, or to trading, is that you need to bounce back from mistakes, and you can't dwell on them, because if you dwell on them, then you're going to screw up the next play. So
That's
that's a
exactly right. I love that. I love how you use sports as the analogy for that, because this is a sport. I mean, trading is a sport. And you make mistakes, and it's about how recovering. It's about accepting those mistakes, being accountable. I mean, if you go into denial, you're never going to learn from them, and you're not going to recover, and you're going to keep making those mistakes. So you need to
yeah.
accept it. We're all human. and I love that attitude you have.
Yeah,
It's great.
another thing is you can't blame the market. That's
Oh
another thing that I
gosh,
see on
yeah.
Twitter. When people get aggravated, they're like, "Oh, well, this is broke." Like I've seen people say that about the VIX, and it's my own little
Oh
inside
yeah.
joke.
They say
Oh,
it's
it's
broken, right?
broken. I can't be wrong. The market's broken, and that's the complete wrong mindset. Every every action you take, you are responsible for, and of course there's going to be circumstances, just like baseball, right? I mean, there's going to be something that happens where, geez, there's a bad bounce, right? Or there's something that happens, but that's part of the
Mhm.
game. That's part of trading, and you have to roll with the punches. But at the end of the day, it's how you respond to the bad bounce,
I
or
love that. It's how you
um,
react.
yeah, it's how you react, and you can't blame anybody else except for yourself. And I'll tell you, for that mishap that I had at the end of April, my goal whenever I have one of these things, where if it does reflect on my performance for the month, then I know I've got to come, like, what am I going to do to correct the situation for the next month? Because I'm sure as hell not having two bad months in a row.
Mm-mm.
So, and it does happen. And again, like I said, you have to understand that you're human and that you are going to make mistakes like anybody else, because everybody makes them.
Absolutely. I love that. Epictetus, the Stoic, said it's not what happens to you, but how you react to it that matters. And that's a very, Stoic mentality that you have. It's not, don't blame the external factors. It's not the market. The market's not out to get you.
Yeah.
You should be accountable for your actions because you're the one who clicked the buy and the sell button, and it's you. And accepting that you learn, and recovering and coming back stronger and better because you can use that information to learn and to be better. And that's how we are in life as well. It's not just trading. And great attitude you have. May I ask what sports you played? It sounds like you played all of them.
Well, thanks. Yeah. So when I was really young, I played baseball, but really
Mm,
I loved football. Football was my favorite sport. I
yeah.
played some basketball here and there. I wrestled in I came upon wrestling like at the end of high school because a bunch of football players a couple years older than me were like, "Hey, you got to go out for wrestling." And I'm like, I never wrestled, and I did not have like a huge successful wrestling career, but I learned so much. It was one of the hardest sports, finally towards because it takes, like everything, it takes a little while, right, to be good but it was one of the most competitive, one of the hardest sports. So every sport that I've played, I try to really, of course, do well in it and so forth. But yeah, I mean, you have to try different things and figure out what you like. But for me, football was my favorite sport.
What position were you in football?
So I played what's known as a wingback on offense, which is kind of
Ooh,
like half running back, half wide
yeah.
receiver. But I was a defensive back for a number of years, and then I got to play my senior year. I got to play a little bit of outside linebacker, which was fun too because I'm not a big guy, but
Mhm.
it just happened to kind of fit in pretty nicely. But I actually enjoyed playing defense more than offense.
Very nice. Awesome. So, football player, sports, we know you love your sports, and amazing trader, and you have a great attitude. Thank you so much for sharing this all with us. Christian, if I missed anything, please tell us. Otherwise, I'd love for you to tell us how we can find out more about these amazing services that you offer at Tribeca Trade Group.
Yeah, sure. Final thoughts, and I'm sorry the sun is. I've got the shades down in my office, but the sun is comes in at this hour. But I would say just in summary, this is just trading is just a great. It's such a great career, and even if you can't do it full time, part time, it's so interesting to me. It's highly competitive. It can be very rewarding. But you have to recognize too, like this year, last year, these are extremely challenging time frames. And I would say if you're a new trader or investor, this is so much of a better time to be learning this than, let's say, 2020. 2020, if you came into the market in 2020 and started to learn, you were not, I mean, odds are you probably did better than what you're doing this year. but the market was a lot easier. The market would bail you out of every mistake that you made. So this is really a great time to be learning because sometimes the market does behave like this. So there will be eventually better time. Better times. I can't tell you when, but I think if you're learning during this environment, you're setting yourself up for, a better career down the line. So thank you again.
Thank
It's
you.
always a pleasure to do these with you. You said so many nice things about me, but you are really great. You're such a great follow, and I love your mindset as well. On Twitter, you put out just a lot of great commentary, and I enjoy your podcast. It sounds like you're doing very well and have interviewed some great guests. Where you can find me is just my Twitter is at Fromhertz, first initial last name, or TribecaTradeGroup.com. You could go there to learn more about the company that I own and manage.
Thank you so much. You're so kind and you're so awesome, and really appreciate you coming on here and sharing this amazing stuff with us, because I have to say, I love it all. And you make it look so simple because you're a great teacher. And I'm sure Tribeca Trade Group is a fantastic group to be a part of. And I'll have to check it out myself.
Sounds good.
Thank you so much, Christian. Have a great day.
You too. Take care.
Thank you. And thank you to all the listeners. Thank you for listening to the Rose Show podcast. Please visit RosannaPrestia.com for more episodes. See you soon. All investment, real estate, financial, legal, and tax opinions expressed by Rosanna Prestia or on the Rose Show should not be relied upon as professional advice and are intended to be used for informational purposes only.